What's going on, guys? Thanks for joining my channel, Robinhood. This is Bob. Today is Wednesday, January 6th, and I'm excited today, guys, to go over 3 low-cost stocks that you guys can buy and do option trades and have a return of at least 12%, if not more. So let's get started. If you guys are familiar with my channel, I do trade at just over $100,000 in stocks at the moment. So if you guys have a smaller portfolio and want to try to do option trades on a smaller scale, this is definitely the 3 stocks that you want to start with. So I have been checking out a lot of different stocks, and these are the 3 highest paid option trades that you guys can get out of it. GoPro will probably be the safest bet with the biggest return. So let's check out GoPro. So you're sitting at $8.74. So when you do the option trades that I am talking about, you would have to have at least $874. You would have to get 100 shares of this to do the option trades that I'm talking about. So I would be selling calls on this a long call. So we check out the day, it is up 3%. You look at the week, they're up 5.3%. For the month, they're down 2%. For the 3-month, they're up 84%. The 1 year, they're up 104%, and the 5 year, they're actually down 50%. So they're very highs. You're sitting around $16 or $17, and they did fall off pretty good, and then now they did starting to come back up. So what I am recommending, you guys sell a call and do a long call. What that means is I would pick a year from now, which is January 21st, 2020. So if we do look at that, the crazy thing about this is you could pick a strike price that is absolutely far from where the stock is at $15, and you can still get a premium of $1.02. You times that by 100, it would be $102. So if you wanted to be a little more risky, you can go at the $10 strike price, but I would suggest to go to the $15 strike price, and I'll show you a chart why. So if you did do GoPro and you did $8.74 strike price, you sold a call that expires a year from now, 1/21/2022, at a strike price of $15. The premium you get is $102. Your total investment would be $875. You would make a profit of 12% just doing this option call. And I believe just to get to this actual number of $15 is not likely to happen within the year, because at the very peak, very peak, it was only at $17. So the only way you would lose on this if the stock price did go down any farther than $7.72. And you can have more than one option call. So if you did have $2,000 or $3,000, you can do this and then have a 3 option calls if you chose to do this here. But like I said, the premium would be 102, and that doesn't even include if the stock went up. So if the stock did go up $3, you'd be making $300 off of this plus the premium. So your profit would be in the 48% range on here. So just keep in mind, GoPro is probably the safest bet because it has the farthest strike price. But let's go to the next stock, which would be Ford. So if we did go to Ford, this is sitting at $8.89 here. It is up 2%. We check the week out, it is only up 0.68%. For the month, is down 3%. For the 3-month, it's up 25%, and the 1 year is only down 2.31%. But you check the 5 year out, it's been on a slight decline for the most part, and the peak, you're sitting at about 13 bucks. So if you go to the trade option for Ford, same exact thing, you sell a call, you do 1 year out. You can always do it sooner than that. You can do weekly, you can do monthly if you want. I just do the 1 year out because you usually get a better premium for the long run. So this strike price here, I would be more of a safe bet at $10. Like I said, the very peak was at $13, but I don't believe Ford is going to be getting past $10 anytime soon. You would get a $107 premium, and the percentage of profit is 77%. So if we do look at Ford here, $8.85 at the time I made this. You sell a call, same thing, at a strike price of $10. You get a premium of 107. Total investment $885. Same thing, 12% profit. You would get a loss if it went down to 778, but you basically break even if it's 778. Anything lower than that, you would have a loss. But for the most part, it's a 12% profit that you would be getting out of Ford doing this long call on here. So last one we're going to go with is going to be Marathon Oil. This one might be the most volatile stock out there. So if we check the day out, it's up 0.67%. For the week, it's up 11%. For the month, it's up 12%. Look at the 3 month, it's up 74%. But you look at the 1 year, so as you can see, the 1 year, it's still down 45%. And the 5 year here had a pretty rocky track record here, but at the 5 year, it was all the way up to $23. But I'll pay attention to the 1 year. I would say in the $10 range is possibly where I would go with the trade. So if we go to the options here, same thing, sell the option, go down to January 2021, 22, and then we go to the strike price here. If we went with the $10 strike price here, you get a premium of $104. So if we look at the percentage of profit, it's 82%. Check the spreadsheet out here. Marathon Oil right now is at $7.48. So this would be the lowest cost share. So you would just have to put in $748. Sell a call at $10 strike price, premium 104. You'd actually make 14% off of this, and then at 644 would be anything less than that would be a loss. So with this one here, I would say has the highest chance to actually hit this number. But if you did have to sell it at that, you can always buy it back out or just take the profit and call it a day. But these are very low cost stock option trades that you guys can do. The reason I picked these is because the premium on these 3 ones are very high. I'll give you one example of a low cost stock with the premium that's really low. So if we go with Fitbit, this is also a low cost stock here, but if you do look at the Fitbit, it's up 0.72%. For the week, it's up 3%. For the month, it's down 3%. For the 3 month, it's up 1.7%. And then for the 1 year, it's up 9%. Check the 5 year out, definitely dropped a lot. I mean, it was all the way up to 17, 18 bucks. So if we go with this option, you sell, you go to the same date, these premiums is barely anything. So even at its $7 right now, even if you keep it at the $7 range, you only get $50, and the percentage of profit's only 67. And then the next jump is at $10, so you would only get a $10 premium, which is barely anything, to be honest with you. So there's a lot of stocks out there that's low cost, but your premiums are going to basically be nothing. So these are the top 3 ones that I did find at a low cost for you. So if you guys do try this out, definitely let me know. Like I said, all these are less than $1,000, and then with at least the 12%, if not more, return if the stock itself goes up and does not hit your strike price. So definitely, guys, if you guys like what you see here, hit the like, comment below. I'm trying to get to my 200 subscriptions. I'm at 152. Definitely subscribe. Thank you, guys. Have a good day.